time for the word on Wall Street. Top investors watching your money. Joining me now, Michael Lee, strategy founder Michael Lee, Bull Tick Capital Markets chief strategist Catherine Rooney-Vera, and Amerivet Securities head of U.S. rates, Greg Farinello. Catherine, let me start with you. Bank of America just reported some mixed. We're looking at the start of tech earnings this week. Netflix is out tomorrow. Tesla is out on Wednesday. And I laugh because Netflix is really just a media company and Tesla is an automobile maker. But we do have tech companies like Microsoft, Meta, Facebook's parent, and Twitter, among others, that are laying off workers or slowing hiring on growing concerns about the economy. But what are you watching in terms of, like, Netflix is, you know, a struggling media company, and then Tesla is just an automobile maker at the end of the day. As fancy as those cars are, it's still a car.
Yeah, Dagan, what I'm looking at is the broader macro picture you can take away from these tech companies, which goes to what you just mentioned, with a lot of these companies either freezing hiring or laying people off. So the talking point about this recession that we're in right now is how strong the labor market is, and we haven't really seen any weakness in the top line numbers. The labor market is a lagging indicator, and I think when we go through over the next few months, you're going to see that come through in the weekly jobless numbers as well as the non-farm payrolls. But all these companies are either freezing hiring or laying people off. The one bright spot, though, I think we're going to see in earnings is IBM, which comes today after the close. IBM has made a structural shift to the cloud, artificial intelligence, and software. So hopefully we'll get some good numbers from them. Mm-hmm. And then on Netflix, what you're also looking at, how big is the subscriber drawdown in the second quarter? Expectations are for a loss of something like 2 million customers. We're going to get the dumpster fire that is Twitter reporting their earnings on Friday. So what I want to hear from them is what are they saying about business going forward? What is their look at the underlying economy? With inflation kind of raging through everyone? I think on IBM you'll get more of a Fortune 500 corporate America outlook as to tech spending, what you're getting from there, and then a lot of these other companies you're going to get a really good look into the consumer. So what kind of guidance are we going to get? What are they doing in terms of their workforce? I wouldn't expect really good earnings from any of these companies other than IBM. Snapchat also reports on Friday. I want to hear what they're seeing in terms of ad spend. Their last quarter earnings was really, really dire, their outlook. So we'll see what we get from these guys in terms of guidance and outlook.
When you've seen stocks get turned down the way they have in some of these companies, very often the big guys would come in and snap them up, swoop in and buy them up. But if the outlook for the overall economy is uncertain, maybe you don't get that kind of deal making happening. We'll see. I mean, obviously, Elon Musk tried to buy Twitter, and that went south quickly. Greg, the top